channel. In this video, I'm going to share with you, if I was going to start over trading the TTM squeeze today, what I would do differently. Now, we're looking at a squeeze, so it's in a beautiful daily squeeze. There's a couple of things I don't like about this trade. Number one is I don't like that the blue's crossing the red. To me, what I have seen in my experience is that's an indication that the bearish momentum is starting to pick up. Watch out. 9 times out of 10 in the past, I would enter right here. And probably 7 out of those trades I would lose because of this very concept. Once the blue line crosses the red, pay attention. That momentum is strengthening. And in my experience, just like over there where I circled, that leads to the blue crossing the pink. Now, if the blue crosses the pink to the downside, I have no business being bullish. So this is what I'm projecting out in the future. Doesn't mean it will happen. I don't know the future any more than you don't know the future. But here's what I'm projecting to happen. That blue is going to cross. So if I enter right now bullishly, which I will not, because none of these momentums shifted. And if that blue crosses the pink, then this momentum is going to continue to the downside. I don't want to be in this trade unless the momentum is giving me a sign. So here's what I'm looking to happen. I'm looking for that blue to cross the pink. Then the blue is going to go down, and it's going to hit one of these moving averages. Now, I don't have orange, so just bear with me. Just pretend like that's orange. I am now looking for the blue to come down and price action to hit the orange. That's my first line of attack. Okay, but what might happen is it might come down. It might come down here, and it might hook up into a bear flag. That's very possible, right? First low, 2 to 5 day hookup or 2 to 5 bar, bear flag. So once the blue crosses the pink, my brain is now shifting to bearish. I'll be looking for bear flags. I'll be looking for squeezes to the downside unless it hits my longer term moving averages. This is the 50 SMA, the 100 SMA, and the 200. I have those for a reason. I like to see the short-term moment. Well, I don't like to, but if it breaks, the 8 breaks the 34, price goes down. I can trade bear flags, bear squeezes until I'm looking for it to hit one of these longer-term levels. It could hook up, roll back down, then hit the green. Here's what I'm looking for at any one of these levels, just so you know. I am still trading bear flags, right? Bear flags. But here is one of my favorite patterns. Again, my brain, my mentor told me a long time ago, think several moves in advance, but only trade based on market action. I'm not going to trade unless I see it, see the setup, place the trade. I'm looking for it to hit, then work its way back up, break back above, come around that 50, and then start to consolidate. Then that is one of my favorite squeeze setups because I risk a little bit and my reward is big. So I'm looking for this 8 to break over the 34. Come down to a major moving average. Hook back up to around that 50% mark, you know, our Fibonacci, our 38 to 61. We talk about it here in class. And then consolidate. That is one of my favorite squeezes. Now, that's an option. And again, I'm looking at all this stuff right now, thinking way ahead. So now price breaks the orange, comes down to the green. Okay, big long-term moving average. I'm looking for the same thing, bear flags, squeezes to the downside, unless it comes up to the 50% mark and gives me a squeeze like that. So my brain is thinking right now, squeeze setup. 8 cross the 21. That is a red flag for me because in the past, that usually leads to the blue now crossing the pink. I'm going to look for it to hit a long-term moving average hook back up either into a bear flag or squeeze. But if it makes it to the midpoint and then consolidates in a squeeze, that's one of my favorite setups. Let's take it a step further. So price breaks down, it breaks through the green. That setup is off. Now what I'm looking for is a divergence into the squeeze. We talk about that. So if I get that divergence into the squeeze, and if you don't know what a divergence into the squeeze is, go back and check out my videos. That is a reversal pattern. So I can look at TW and project 2 or 3 months in the future. Learn the patterns. History repeats itself. It's one of the core tenets of technical analysis. Market action discounts everything, and prices move in trend. If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator, click right